One of the biggest concerns of investors at the moment is inflation. Investors like Ray Dalio, Charlie Munger, and Michael Burry are warning everyone that inflation is right around the corner. We might be seeing the same thing that happened to Venezuela, according to Munger. And if we look at our history, as Michael Burry said, quote, the 1970s American inflation is more relevant today than one might think. These known investors from around the world are all agreeing with the fact that we are close to inflation. There are also statistics that say that it might be closer than we think. Is this the end of the world? Nah, not really. You might be wondering how you can save yourself from what is to come, and in this video, we're going to discuss the best ways to profit from inflation rather than losing out on it. Welcome to Empire Investing, where we'll be sharing the latest in stock market news, technology, and innovative investment strategies for aspiring millionaires and billionaires. If this is your first time watching our channel, please do consider subscribing to see more videos just like this. So let's get started. Before we talk about profiting, let's take a look at the warning signals that are evident. First, the printing of money. When the pandemic happened, the government paid what seems to be the most costly economic relief effort in modern times. Almost $2.3 trillion went to businesses that were affected by the pandemic, $651 billion in tax breaks for laid-off workers, $454 billion to help stabilize the market, $884 billion for workers and their families, and $253 billion to state governments and public agencies to help battle the pandemic, and more. Simply put, about $4 trillion was spent to win the battle against the pandemic. But where did all this money come from? The Federal Reserve. They printed out money to aid the country. Although the money was used for good, from what we generally know about printing huge amounts of money out of nothing, is the inflation that comes with it. When this quote-unquote free money is given to people, the demand for goods increases since they have more money to spend. This means that the prices of those goods will also increase. This is why Munger said that we might end up suffering the same consequences of Venezuela's hyperinflation. Second is our aging world population. In a book by Pradhan and Goodhart, they discussed how in the 1970s there were more young people compared to retirees. In this chart, we can see that after 50 years, the population of young people and retirees are almost about to meet in the middle. This is alarming because it basically means that there aren't enough people that are fit to work. And without a lot of workers, the production of the supplies is less and the cost of labor also increases. And in order for businesses to pay for the price increase of labor and supply, the costs will go directly to the consumer by increasing the price of goods and services, also known as, that's right, inflation. Excessive printing of money and the aging world population are just two of the factors that can lead the economy to higher inflation in the future. As a beginner investor, you need to determine what areas you should invest your money into that will do well during the upcoming inflation, instead of simply keeping it in a bank where your money doesn't grow. Number 1, real estate. We know that if we keep money in the bank, our money gets used by the bank for their own profits. With inflation, the value of your money goes down. By investing in real estate, the price of the properties you own increases with inflation. You can also rent your properties out and earn money passively. Additionally, when inflation brings prices of homes up, rent also increases, which means more money in your pocket. If you think that's too much for you, you can also consider investing in real estate companies such as American Tower Corp, Crown Castle International, and Prologis. These are only a few examples of many, so make sure to check into them and do your own research before investing. Number 2. Gold. Gold is often called the hedge against inflation. The value of the dollar declines, the price of gold shoots up. As you can see in the graph below, during the 1970s to 1980s, the inflation rate was more than 5%. At this time, the price of gold went from $250 to $2,000. Many investors will say that gold is a way to avert inflation risk, so if you want to invest in gold, you should consider buying it now before it shoots up again. Number 3. Cryptocurrency. I'm sure a lot of you are already aware of how big the cryptocurrency world has become over the past couple of years. Cryptocurrency is a digital currency that doesn't need or rely on banks to transact. Take Bitcoin, for example. Just like gold, it has a limited supply and cannot be generated like cash. If you had invested $1,000 in Bitcoin 10 years ago, you would probably have around $17 million today. Although cryptocurrency may be promising, you have to remember that cryptocurrency is widely known for its volatility when it comes to investments. It's high risk, high reward. So before you get into this type of investment, make sure to do your own research and take your time studying all about it. Real estate, gold, and cryptocurrency. These are three assets that will do well once inflation happens. But just knowing about these three won't be enough.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company, you didn't even understand what they did or couldn't pronounce the name, but they'd made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets.
You should also be aware of the stocks that perform well. According to Buffett, during high inflationary periods, you should focus on stocks that have these three important things. Number 1, its ability to generate cash rather than consume it. Number 2, industries that can increase prices easily along with inflation. And number 3, purchase shares of companies that have the ability to accommodate huge volume increases in business with only small added investments in capital. I can understand the business behind Coca-Cola, automobile, or textile industry. I know how they work and how they can generate profit. I can predict their growth. Warren Buffett. Like Buffett, you have to understand the businesses that you know will work and can generate profit for you. Take Coca-Cola, for example. They can increase their prices alongside inflation and can generate cash more than they consume. There's also Sanderson Farm. They increase the prices of chicken and still generate cash alongside inflation. Favor these types of stocks and you'll be able to ride along during inflationary times. Hyperinflation can take virtually your entire life savings without the government having to bother raising the official tax rate at all. Thomas Sowell. Inflation is right around the corner, and just like what Thomas Sowell said, it can take away your savings. So you have to invest the smart way and make your money work for you. That's all for today. Do you think these assets can ride along with the inflation that's right around the corner? Join the discussion in the comments below. If you enjoyed this video, please do click the like and subscribe buttons. We'll see you guys in the next video.